Yeah.
Hi, good night, good night. Yes, please. I feel like when I come, I should got some intro music or something like some Rocky Tiger or something. You know, like
I have the tiger.
Kirk, get it together.
I rewind a little bit. We're gonna. So at this point, guys, we are going to bring on to the call none other than one of the first individuals, to complete the academy. You know, within our Forex Academy, from the basics right the way through to the advanced levels, and none other than Tamisha.
Yay! Good night.
That browser here taking forever. Sorry.
Plug it in, watch money you come in. Your Wi-Fi and exchange rate, dog. Forex. 100,000.
Let's go!
So if you feel say you song this, check your Rolex. Cause of Forex, money no transit. No, me no joke, man. Forex, money no joke.
Right. First, I want to thank Kai. Kai, you're a great teacher. Thank you. I want to thank God. I want to thank myself. I don't know who else to thank, but myself again. Yes, and yes, it was me that Kai was coming for because I bought a dog.
Hey,
I bought a dog. I have a purebred Rottweiler.
Hey,
very good.
Bought the dog, and I'm very happy. And I encourage everybody to get as happy as me. Thank you. Thank you.
Phenomenal. People ask, what did you do with your first paycheck? I bought myself a dog, a Rottweiler. Don't play.
Purebred. Good.
Purebred.
Right.
Okay.
That's all we need a milestone too for you just now.
Again, congrats for real. Congrats, man. Forget yourself. You know, you can put back on the bonnet. Right. I love it. I love to keep it 100 on the call. Guys, I love that, man. You know, so all right. So we're gonna jump into some stuff. I think before we step out into the workout rooms and so on, probably for the next maybe about 20 minutes. Like I mentioned, you know, we're gonna go through some profit maximization stuff, how to maximize your profits. And then Kurt, you tell me, you know, like if we just keep it one or if we split it or whatever, you know. Yeah.
You mean after the profit maximization?
Yeah.
I haven't been with my beginner basics crew in a minute. So I wanna.
So yeah, we're gonna definitely split the room. The beginners will definitely go with Kirk afterwards, and the advanced, you know, you guys gonna come with myself. Last week we had a phenomenal session, man. Everybody that was on the call, it was absolutely amazing. Kurt, you missed that call. Janelle, you missed that call too. Sorry. So a lot of y'all that wasn't here, y'all missed that call too. So that's what you get for not being on the call. Sorry, but yeah. So let's go into. We're gonna go into.
Are you planning to record this call?
Yeah, I think it's
we're recording already.
It's a good time to remind.
Yeah, we're still recording. I think maybe breakout we might gotta record again.
Okay.
Yeah. All right. So Harry, I didn't forget you. You just come out of my mind actually.
Yeah.
Yes. All right, guys. So let's go into it. Let me know if you guys can see my screen. All right. Let me know if you can see my screen. Can you see my screen?
Not yet.
Let's put it on. Oh, okay. See what's happening. Good?
Yep.
All right, perfecto. All right, cool. So let's talk about this real quick, guys. All right, let's make this make sense. All right, and like I mentioned to everybody on the call prior, for all of my Android people, this update has not occurred as yet, right? So I'm gonna just show you guys so that you see, so that you are aware, etc. Right? So like on the app, you see the pips button, right? The amount of pips. Click on that. You see the breakdown month to month. You see what it is currently. You see what's going on. You see how the traders are doing, right? You know, this trade here at the bottom was an error, but it's recorded on the app, you know, as a minus 670. So I got the app in a headlock right now, right? Because it was an error that was of a trade that was sent, but in the entire company, 10 persons took the trade, so we can't delete it off the app. So yeah, for compliance reasons, so forth, right? But this is the existing month, right? This is what's going on right now. The Geico mine, you know, it has 4 wins and 1 loss with plus 415 pips, all right? Just, you know, you guys can see everybody else's results, right? And then, and then, so if you look previous months, you can see what's going on. All right, so this is how the app is doing. App is actually doing really good. All right, 11 wins, 4 losses, 6 wins, 2 losses, 5 wins, no losses, 2 wins, 1 loss, 1 win, 0 losses. And as you realize, like as the month go on, like some persons obviously have been removed from the app. All right. So basically, you know, like some housekeeping was being done, some cleaning up was being done. All right, of persons that either were not performing or you know weren't that consistent. All right. So you see, like the numbers have become much less, right? And yeah, so this is what has been happening last couple of months, all right? You know, that guy Goma, he been doing decent, you know, decent, you know, six wins, 3 losses, 600 pips plus. That's good.
That's a 50%.
Yeah,
Right there.
more than
600 and something
50%.
pips.
Six solid 9. You know, that's
You're right.
about 70% or so. You know?
You're right.
All right, so and then if you go over to FL2 Plus, you see FL2 have been absolutely lighting it up. To be quite honest, all right. If you look, last month was 30,000 pips. All right, you see Market Bully, US 100 trades, he did 30,000 pips. All right, it's ridiculous. All
Poor
right,
Nas.
3 wins, 19 losses. You know, like that's like destroying, bullying the markets literally. All right,
Nas don't got a chance.
whatsoever, bro. This month so far, it is 9,500 pips. All right, Market Bully. He is literally obviously he is FL2 based on you know what's going on. You know what I mean? So he himself carries FL2. So 10 wins, 6 losses. Right, the app has been lit. Right, so FL2 Plus, you get access to that, as you know, for additional $30. Right, you get access to FL2 Plus. All right. So let's talk about what we came here to talk about, all right? So in a case like this, all right, let me show you guys what I've been saying. So I want you to take us, actually you guys go open your app as I talk about this. I don't even have this on the screen. I'm gonna pull back up like a whiteboard, right? So that we make this make sense, okay? So as you guys can see here, stop loss, which is SL, is 27 pips, okay? TP1 is 30 pips. We're going to use this as the example to help you to, like I said, you know, like make sense of this, okay? All right, so let me, you guys can pull that on your screen, put it up on your screen. I'm going to use the whiteboard here and the other whiteboard on this. So you guys can see my screen, correct?
Yeah.
Okay, awesome. Good. So we're gonna type this out right now. All right. So a few things you want to pay attention to. So the stop loss, for example, stop loss here is 27 pips. Okay. I'm gonna explain what I've been saying in the text that I typed up on Sunday, but you know, just really making it make more sense for you, along with a chart, all that good stuff. Right. Take profit 1 is 30 pips, right? So on average, so I'm going to use some terms that I want to help you guys to make sure you guys understand. On average, take profit 1 on the app carries a risk to reward. Anybody remember ratios when you were at school?
Mm-hmm.
Good. So this risk, your stop loss, right? Your stop loss is your risk. Your take profit, of course, is your reward. Okay. So your risk to your reward in this scenario, right? Actually, just keep it simple. I'm gonna just put it like this. 30 pips, stop loss, 30 pips, take profit. Your risk to reward is a 1 to 1. Right? You risk 30 pips to gain 30 pips. That's what you call a risk to reward of 1 to 1. Okay. All right. So if that was 27 pips, it would still be just around the same, you know, 1 to 1 still. Yeah. Maybe a 1 to like 1 point something, 1.2 or something like that. All right. But that's what we call a risk to reward of a 1 to 1. All right. Next thing is let me know as well if the text too small on your screen, anything like that. Are we good?
That font size looks fine, but it could be a little bigger if you want to. But
I have no idea how to make it bigger, so I shouldn't even ask. Right. Yeah, I have no idea. I should make it bigger. All right, so here's the next scenario, right? So now stop loss is same 30 pips. Again, this is your risk. Your take profit, right? 2 was, I want you to look at the app. Tell me what the app says, right? Your take profit 2 was what? For this scenario of gold. Your take profit 2 was 60 pips, right? So that's your reward. Okay. So again, your risk to your reward is now a 1 to 2. Okay. So again, what that means is, right? So again, let's put this like this. This was you risking $1 to gain $1. Yeah. This now is you are risking $1
Get 2
to gain 2. Right. So no, this obviously is you're putting yourself here in a much better position, right? Because in a scenario like this, for you to break even, okay, for you to break even or for you to make money rather, you gotta win 60% of your trades or over 50%, right? So 50% plus. You gotta win more than 50% of your trades for you to make money here. Okay, everybody following? For you to make money here, all right? For you to make money here at a 1 to 2 risk to reward, what would that look like for you to be profitable? What percentage? Let's see. I'm gonna pull that up for you guys now. All right, I'll pull that up. All right, we look at this. Oh no, I gotta change what I'm sharing for you guys to see that. Nonetheless. All right. So
unless you drop it in the chat.
yeah, I'll do that afterwards. All right. So I 1 to 2 then, right? For you to be profitable, guys, you gotta win 40% of your trades. Yeah. You step into being profitable when you win 40%. All right. So let me just put this at 60%, right? Because 50% is actually break even. 40%, you gotta win 40% of your trades to be profitable. Okay. Here, you gotta win 60% of your trades to be profitable. Okay. So if you're taking, all the trades in the app, for example, all right, if you're taking the trades in the app is going to be profitable about 60 to 70% of the time. So if it is that you are taking all of your trades at take profit 1, you would have to take all of the trades to be profitable. Am I making sense? All right, because the app is 60 to 70%. All right. So if you're not taking all of the trades, you might feel like, oh man, like I ain't really profiting. All right. So because then, like, for example, trades like gold will come out today, and I would see a lot of people say, and they miss it. You know what I mean? Right? So if it is now that you get to the point where you could take trades at take profit 2, remember, this only comes with knowledge. I can't just tell you take a trade at take profit 2. You know what I mean? Because you don't you don't understand how to manage your trade as yet. All right. Some of you. So we're gonna talk about that on the call, and I'm gonna give you a strategy to be able to do that so that it makes sense. All right. So let's do take profit 3 here real quick. All right. Was 30 pips. Again, that's your risk. Take profit 2. Sorry, take profit 3. Your reward was, I believe it was 130 pips. Somebody can tell me.
Yeah, 130.
Yes, 130.
Okay, awesome. All right. So this is your risk to your reward. This now works out to be a 1 to 4 point something. All
Yeah.
right. So 1 to 4.5, probably. About. That's about
No,
right. 4.3.
almost. Just do 4.
All right. So we're gonna do it. We're gonna work with 4. All right.
4.33333.
4.3. All right. So there's a 4.3 risk to reward. 4.4, Janelle said. All right. 4.4 risk to reward. All right. So again, in this scenario, now when you look at this, you risk $1 to gain $4.30 at this point. All right. No, like for you to be profitable here now, guys. All right. For you to be a profitable at 1 to 4 risk to reward, you need to win 30% of your trades to be profitable. 30%. So you see, like when people say, oh man, you know, like I need to win a bunch of trades. No. All right. If you're able to increase your risk to your reward, your profitability goes up. Right? You could lose 7 out of 10 trades and still be profitable. That's the plus, right? That's the plus with getting trades that are at take profit 3. All right. But again, that comes with knowledge, because not every trade goes to take profit 3. And I want you to write this down. I put it in the chat, but I want you to write this down. All right. 60 to 70%, right? 60 to 70% of the trades in the app. So we're talking about the app right now. Yeah. Because this is what you're using on a day-to-day. So I'm going to teach you all to be profitable with the app. 60 to 70% of the trades in the app, right, hit take profit 1. Okay, so 60 to 70% of the trades are profitable. Okay, 50% of those trades. So how do we put this? So 50%, 30 to 35%. All right. 30 to 35% of those trades that hit take profit 1 hit take profit 2. All right. 30 to 35% of the trades that hit take profit 1 go on to hit take profit 2 as well. Okay. So half, actually, no, I word that wrong. Right. 50% of the trades that hit take profit 1 go on to hit take profit 2. Okay. Does that make sense? 50% of the trades that hit their profit 1 go on to hit their profit 2 as well. Now, their profit 3, right? I believe it's about 30% of those trades, right, hit their profit 3. Okay. So if 10 trades were sent, right? Sorry, if 10 trades, if 10 trades were sent, so 10 trades sent, that means 6 to 7 will profit. Okay. 3, all right, let's put out 3. 3 will hit profit 2. All right. And 3. Yeah, 3 will hit their profit 2. And basically, like out of 10, probably like 1. All right. 1 will hit their profit 3. All right. Out of 10 tricks. All right. So, all right, 1 to 2. You know, but it's 1 to 2. So it depends. All right. So 1 and 2 will hit their profit 3. So everybody got that? All right. It's no perfect world to say, man, all the trades that come, bam, all gonna hit their profit 3. That's not the case. All right, that's definitely not the case. All right, so I want you, let me copy this real quick, right? Because I want to go through. I can't copy it. I'm gonna just scroll through the chat and we're gonna just take a quick look at it, real quick, just to see what's going on. All right, just quick. Yeah. So, let me share my screen. All right, let me share my screen on the actual app. And I'm gonna give you guys a means as well, so that when you're trading, that you can start to implement it and so forth, right? When you take a trade from the app, even when you're personally trading, it doesn't matter. It's just a way that you could just maximize your profits, when you're trading, all right? So real quick, right, we're gonna I didn't go through this beforehand or anything like that, to for me to give you these numbers, like these numbers that I would have done like prior months and so forth. And I believe that the app basically still, like does the same thing. All right. But we're gonna just, for example, we could just take a peep at the last 10 trades and and see what happened. Right. So because the numbers are usually numbers. Okay. Everybody can see my screen.
Yeah.
Can you?
Well, I still see any whiteboard.
Okay. I see what gotta go on here. You see my screen now? No?
Not yet.
How do I get back to Zoom? Okay. Yes. All right. So we should be good now?
Yeah.
Okay, perfect. All right. Good. So last 10 trades. Somebody track it, right? Let's just see what happened. All right. So trade number one, we got all 3 TPs. Okay.
Right. Mm-hmm.
We can just go to the last 10 trades. Trade number 2, this one got closed, but it took a loss. So we're gonna count that as a loss. All right. Trade number 3, we count that as a loss as well. All right. So right now we got 1, 3. Trade number 4, we hit all 3 TPs. All right. So that's 2 trades, 1, 2 trades lost. Right. And that's 2 trades that hit their profit 3. All right. So this number 4, this one took a loss. All right. Number 5, this one took a loss. So that's what? 4 out of
4
that's 4 lost to 1. Yeah. 4 lost to 1. That one got closed. This one lost as well. That's 5 lost to 1. All right. So we got 5 losses now, 3 wins. All right. So this one took take profit 1. All right. This one close, break even, close, break even. All right. Next one here. So that's 5 and 4. All right. This one took take profit 1 as well. And this is the 10th trade at 5 and 5. So literally last 10 trades was a 50%. 5 wins, 5 losses, right? And 2 hit take profit 3. All right.
3 take profit 1.
3 hit take profit 1. Actually, no, 2 hit take profit 1 and 1 hit take profit 2. All right. That's what it looks like the last 10 trades. It was 5 and 5. All right. Of course, your losses, was obviously less than the wins. Right. So, it will still be profitable, although it was 50%. Right. But like I mentioned, if it is that you only took take profit 1 on those trades, what would happen is that you would just break even. You would literally look as though you didn't make anything. Right. Because you won 5, you lost 5. And you're at take profit 1, you basically break even at that point. All right. You guys follow me?
Yeah.
Okay, cool. So this is why all right, I want to help you guys, like I mentioned, to get to the place where you are taking take profit, at least take profit 2, when you're trading, all right, as well. So here's what you're gonna do, and I'm gonna show it again. I'm gonna show it practically on like a chart as well. All right. So here's what we're gonna do. Here's what you're gonna do. All right. So trade comes out. You know that you are risking between, all right, your risk is between 1% to 3%. Okay. 1% to 3%. Now, this is only going to work if we're really doing like a 3% risk, you know, it's a minimum. Okay. So whatever your economy, it can work on anything, but it would make sense, you know, in terms of, because I know a lot of people start with like $200 or less. If you were $200 or less, you have to take a 3% risk. All right, to do this. Okay. So this is a scenario for $200 or less. All right. The camera was the last hand sign. This is the last hand sign. All right, I believe so. The point is to the right is more. That's how I remember it from school.
Yeah, the mouth can eat the bigger number.
All right, okay, cool. Yeah, that's not how I remember it. I just remember which one is the more than, and I know the other one is the last time. All right. So, all right, so the point to the right is more, the point to the left is less. All right, good. So, guys, so $200 or less. All right. Now, here's what you do, guys. All right. Here's what you do. We know that 3% of $200. All right, 3% of $200 is $6. All right. So you know when you're trading, this is the risk that you're taking max. All right, is $6. A $6 risk. That's it. All right. So we're gonna use the same scenario here to the left, right, for this example. All right. So here's what you're going to do. You are going to take 2 entries into the trade. So you're going to enter this trade twice. All right. Don't stick up. Don't lie. Do it twice. Do it quick. All right. What you're going to do is you are splitting your risk in half. Okay. So you're setting a trade set. So entry 1 equals take profit 1. Okay. So you're going for take profit 1 on your first entry, which is a 30 pip risk. Okay. If you're super new on the call, Jaleisha, I know you probably the newest, not to call you out, but like literally take these notes as it is. All right. Literally take these notes as they are. It will make sense later on. All right. So 30 pip risk, entry 1 is 30 pip risk. Okay. Sorry, 30 pip. Take profit. We're gonna just put TP. Okay. 30 pip TP is your entry 1. All right. And you're using half, right? Remember I said you're using half of your risk. So you're entering this trade literally at like a 1.5% risk. Okay. 1.5% risk. Because and I want you guys to tell me, you can put it in the chat, right? I know talking is faster, but I want you guys to type it because I want to give everybody opportunity to type it. Right? So put it in the chat. Like if you take a 1.5% risk on take profit 1, right? With this, right? With a 1-to-1 scenario, what is your reward in percent? A 1.5% risk, what is your reward? So reward will equal what? Actually put it in the chat. Don't type it up. Don't say out. Right? Put it in the chat. I want you guys to see it because I want to make sense for you so that when you see it, when you do it, it's like, okay, cool, this is why I'm doing what it is I'm doing, and I'm not just doing what it is that Clay told me to do. All right. Let me know. You see. So you do a 1-to-1. All right, 1-to-1. Okay, good. Could it be considered a swing position in some cases? TP3, yeah, for sure. Well, not necessarily, Shania. Not necessarily. Sometimes it just takes a little longer, but it's not a swing position. Swing position is usually like days to hit, right? So necessarily take profit through, but not be a swing position, all right? But yes, good. So the answer is for sure a 1.5% reward. So if you risk 1.5%, you gain a 1.5% return. Remember this, not rocket science, guys. It's a 1-to-1 risk. Remember this from over here, okay? 1-to-1 risk. So your first trade hits, boom, right? Your first risk hit, you get a 1.5% return, right? You got your second entry now, right? So your second entry, you set it for take profit 2. So guys, all this means entry 1, entry 2 just means you enter that trade twice. You went through, you tapped, set your percent, you swipe, you did that process twice. Okay, this has a 60 pip take profit. Okay, so you got the same 1.5% risk, but remember, take profit 2 is a 1 to 2 reward, right? What is your reward in percent? Let me know in chat. What is your reward in percent? What's the reward in percent? Okay, cool. 3%, right? You get a 3% return. So watch this now, right? Watch this. Look at this now. Your trade now goes from you doing a 3% risk to gain a 3% reward to know you're doing a 3% risk, right? You're now doing a 3% risk to gain a 4.5% reward. That makes sense? Does that make sense, guys? All right, so number one, what you do is you secure this profit here, all right, at the 1.5%, bam, you got that secured. Your second trade is still active, right? And it's set to go for a 3% return, right? So both trades hit take profit. So you get take profit 1 and you get take profit 2. Boom, you come up with a 4.5% return, all right? As opposed to one trade set at 3% to get take profit 1, which puts you back at only a 3% return. So what we're doing is increasing your potential upside, increasing your returns, maximizing your profits. Does that make sense? Let me know if anybody understands, right? I'm going to talk about that shortly, actually, right? I just want to make sure everybody, this makes sense so far, all right? Put it a lot, perfect, Lisa. Put an AC in the chat if everybody is all clear, all right? AC in the chat, everybody's all clear. Okay, perfect, good stuff. All right, good. Now, here's what we do, all right? So here's what we do. That first trade goes on, hit take profit. Remember, your entry 2, your second trade is still active, right? So let's talk about this. So entry 2 is still active. It's still moving, still fluctuating, etc. Right? Now, what you're going to do, you want to protect entry 2. Because anything could happen with entry 2. Right? You want to protect entry 2. Right? If you got more experience, you would know how to maneuver with entry 2. Like I was talking to Kurt today, right? Right? If you got more experience, you would know how to maneuver with entry 2. I'm gonna talk about it, I'm gonna show it visually in the chart, and I'm gonna show it as it relates to gold today as well. Entry 2, you are going to move your stop loss to your entry point. All right. What does that do? It basically puts your trade at break even. Like you can't lose. Okay, you cannot lose. All right, like Kurt said, hit the break even button inside of the app. All right, you can go to the app, bam, press the break even button. You know that your second trade can't lose. Max, you can happen is that you come out with a 0% return. All right, but you don't lose, obviously you don't lose anything either. Okay, so in a trade setup like this, let's say your trade comes back. Okay, let me go again. Let me repeat it. All right, for Jem and for everybody else. So you enter one trade, fine. All right, so this is your first entry, 1.5%. Trade goes on, hits take profit 1. Boom, you get a 1.5% return. Your second entry is also, that also went past take profit 1, but you remember your profit is your take profit is actually set for take profit 2. So it will not automatically close that second trade for you. So that trade is still going to be active. It's still going to be moving, right? It's at this point, right? At this point, like you could decide as an individual, I want to take my profit or whatever, you know, you come up with a overall just a 3% return, you know, because 1.5% twice is still 3%, all right? But the aim is to go for take profit too. So what do we want to do? We want to manage this entry now. We want to manage entry 2 in a way that it puts us in the best position possible to earn more. Okay? So what do? We take entry 2 now, and we move the stop loss, right? So our stop loss price, I want you to go to the app and tell me what was the price for your stop loss. What was the price for your stop loss on gold, on XAU USD? Last year that came out, what was the price on the stop loss? Type it in chat. Type it in the chat. Type it in the chat. I want you to be aware or understand what it is that you are saying. All right. What was the stop loss price? Make this make sense because I'm gonna put it on the chart too. All right, but we're gonna know how to maximize this. All right, stop loss, not the entry, stop loss.
Red one.
Yeah, stop loss. All right. So the stop loss, remember stop loss is SL, guys, all right? Stop loss was 2351.7. Okay, 2351.7. Your entry is 2340. No, it was 2346, correct?
49.
2349. All right,
Yeah.
I believe they sent this right. 2349 was your entry point. Okay, so what you're going to do is you are literally taking your entry and you're taking your stop loss and changing the price to your entry price. All right, to your entry price, or you just tap on your trade and click break even. Okay, it basically puts you in a position where you can't lose. Okay, everybody understand that? I'm gonna do it visually on a chart. All right, I'm gonna do it visually on a chart, and then we're gonna break out into these two rooms. Yeah, everybody understand? I see no responses. That's how no becomes entry. Correct, Lisa. All right, correct. All right, let's put this on the chart. Let's make this make sense, more sense. All right. Okay, see, understood. Okay, good stuff. All right. Now let's see real quick. Share my screen. Oh Lord. All right. So can everybody see my screen? That you can see trading view. Should be able to at this point.
Yep.
Okay, you can still see trading view.
I see on
Nope.
WhatsApp right now.
Okay. Voila. What do you see now?
Trading view.
Still?
Notes. Trading
All right,
view.
let's see what's going on here. All right, hold on. New share. You see notes? Trading view.
Correct.
All right. All right, perfect. All right, let's make this make sense. No. All right, so let's use gold as the example today. All right, so let's go as the example today. All right. Cool. So this was a trade. All right. Literally as it happened. Okay. All right. Cool. So remember, right? Everything is just prices, all right? So on the app, you got a price 23.49. Okay, so if you look to the right here, right, we see the actual price. Okay, all right, look here, this is the price, 23.49. Okay, boom, that was your entry. The neutral point is your entry, like the line between green and red is where you are entering the market. Up here is your stop loss, all right? So 23, can't remember what the number was, 51.7, I think it was.
Yeah.
All right. So like here, that was your stop loss. And then these areas here was your take profit. So 23.46, 23.43, and then down here at 23.36, right? Was your take profit. All right. So here's what we're gonna do. So let's look at it like this. This is your first entry into the market. Bang. You are going for take profit 1. Okay. So if you look at this, what does this say here real quick? Can anybody see this? What does this say?
The white on the green is
hard to see.
Yeah. Unless you zoom in.
Oh Lord, that's so ugly. You see, you go. You guys can see that now?
No.
All right, no problem. So it says risk to reward 1-to-1. All right. Risk to reward 1-to-1. That's what that says. So your first entry is this. Okay. You enter with a 1.5% risk. All right. The right area is your risk. Okay. And of course, because it's a 1-to-1, you gain a 1.5% return. All right. Boom. So this is entry 1. Okay. Second entry. So you're entering at the same time. Bam. All right. But in both. Second entry now is same stop loss. So you're taking the same risk. Okay. Same risk, which is a 1.5%. Okay. 1.5% risk. And your take profit now is take profit 2, which is right here. All right. Which is, as you can see, this is double the size of this. All right. So take profit 2 then becomes a 3% return. Everybody got that? All right. Like from a visual perspective, everybody got that? All right. Yep. Okay, good. So let's say, for example, now, all right, let's say, for example, your trade goes on here. Bam. So price hit the entry, right? Price literally hit entry at this point, all right? Boom, you activated into the trade, all right? Then price comes down, bam, hit take profit 1, okay? So you see price then comes down, boom, and hits our take profit. So your first trade, bam, you just profited on that trade. And literally, you know, see if we could come lower or good. So we just make it, it just can't come down on the time frame, guys. No panic. All right, same chart. We just come down the time frame. So it took 1 minute, 1, 2, 3, 4, 5, about 5 minutes to hit their profit 1 after hitting the entry. So you just profited take profit 1 at this point. No, here's what you do. This second entry, all right, I'm gonna show you 2 options, all right, and it's always good to, this is why it's good to get the knowledge. But your second entry now, which is this here, you're taking this stop loss and you're putting it to break even. So you know your risk becomes 0. All right, your risk now is 0%. Like you can't lose anything on this trade. Right, you're at 0. There is no risk involved here. Everybody understand that now? Right, like from a visual perspective, you can't lose. So this is where the trade is at, right here. But if it comes back up, right, let me make this smaller. All right, so this hit your profit, drag this across. If price comes back up here now, right, you take a 0% loss. You can't lose. Okay, take a 0% loss. All right, make sure everybody got that. Everybody understood. We good? Okay, good.
Yeah,
all
okay.
Right. So if price, obviously no, guys, if price no, if this comes back from here and goes here, then you come out at $0. You don't lose anything. You just, this second trade, you come out at $0. All you do is profit this 1.5%. That's it. All right. So let's see what happened here. All right, we see our price coming down, coming down, coming down, come back up. So it came very close to take profit 2, didn't hit it. All right. Came back down, back up, back down again, didn't hit. All right, see price come back up again. Just letting you see it happen, how it happens, how the market moves. This is why I talk a lot about how the market moves, all right? So when certain things happen, you don't panic, all right? All right, so at this point, this trade, you would have broke even, right? Your second entry, you just broke even on that. Like you came really close to take profit 2, but it didn't hit take profit 2. You ended up breaking even on this second trade. All right, everybody got that? All right, everybody got that? Good. Now, if you're a person, right, if you're a person that understands what's going on, right, so I say the knowledge is important. When price come back here, you see what Fabian said? When price come back here, enter again, right? You enter again, right? Because like the way that this is coming down, like, yo, this is going to go down, right? But that comes with knowledge, that comes with understanding, right? So at this point here, right, you could decide, okay, I'm gonna take the same, not 3%, take the same 1.5% risk, right? Like you got taken out, I break even, right? You didn't lose anything, right? So if you want to take another 1.5% risk, take it, right? So you take the 1.5% risk again, right? So now your trade opens back up. Let's see if we can get that here. Let's see you. Oops. Can we? Maybe it was there. Yeah. All right. So now your trade, you get back into the trade again, right? Your trade now goes from this is your. So this would be literally like a third entry into the market, right? You know, go back to a 1.5% risk. Okay, you're back at a 1.5% risk. You enter again when price gets back to the entry. Boom, you go again, right? Watch and see what happens. This is what you don't trip when the market, you know, like doing what it does. Okay. But you only don't trip when you got knowledge. If you don't got knowledge, you're gonna be tripping. Because you're just seeing numbers fluctuating. You're just seeing numbers up and down, up and down. Profit, come back out of profit. Like, look at this. Profit, come back out of profit. Profit, you know, all the time. Seeing number fluctuating, you tripping. Boom, price come very close to take profit 2. Didn't hit it as yet. All right, bam. All right, take profit 2 hit. All right, you can see that. All right, but you see how it happened? Like the market don't just come down. You know, it fluctuates, yeah? But eventually came down. And you hit take profit 2. All right, am I making sense?
Yes.
So that way, you know, you got a 1.5% return here and a 3% return here. Total, you got a 4.5% return on your 3% risk. That's it. That way you increase your earning potential. Now, obviously, you know, as you know, like time progresses, you get the knowledge, etc. Right? You get the knowledge, you will be able to decide, you know what, listen, the entry that I'm putting into the market, I am going to manage my trade, right? When you start to get into the advanced class with myself, I'm going to manage my trade to take profit 3, right? Which is down here now, all right? I just want you to see how it moves, and then we're going to break out into the rooms for the next 20 minutes or so, all right? So I can see how the price fluctuates. All right. So don't panic.
You could zoom into the chart a bit more just so it's wider on the screen.
Oh, it is?
Yeah.
All right. So you guys see how it just hit the profit 1. 3, sorry. All right. Price fluctuate a little bit, bam, 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 and then sink again, bam, straight down to take profit 3. And take profit 3 was that it was
4.
actually a 1 to 4. So if you took a 1.5%, if you took a 1.5% risk, you would have actually come out with like a 6%.
6. Yeah, 6.
You would have got like a 6% return on take profit 3. All right. You got like a 6% return on take profit 3 gates. All right. So learn the information, learn the skill, guys. It's going to pay in the long run for sure. I hope this was of value. Put this into practice. You gotta be consistent with it for sure. So that it actually makes sense. So here's what we're gonna do. Right. So just put a 1 in the chat. That makes sense. Real quick, guys. Put a 1 in the chat. 1 in the chat. That makes sense. All right. All right. Awesome. Awesome. So here's what we're going to do for the next about 30 minutes. All right. We're going to break out into those rooms. All right. So there's going to be the beginner basics room. All right. It's going to pop up on your screen. Look for it. All right. And there's going to be the advanced analysis room. So if you're a beginner, you're going to be with Kurt. All right. You're most welcome, Lisa. All right. If you're myself, you hop into the advanced analysis room. So the rooms are open, right? You should see it on your screen. If you're using a phone, top left-hand corner, it says breakout room, tap on it. If you're using a laptop, you're gonna go to, I think, the bottom of your screen, you might see more or, something like that, and then see breakout rooms. Click on that room, jump in there, all right? So advanced, in the advanced analysis, beginners, in the beginner room. Right? If you're a beginner, in the beginner room. If you're advanced room. All right, let's go. Let's go. Let's go. Let's back it out. Let's back it out. Let's back it out. Let's go. 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 Get out the main room in the advanced or beginner room. Don't stick up. Don't stick up. Let's go. D, enter room. Andrea in a room. Alicia in a room. Fast. Caroline in a room. You're going to come here and trust me, you're going to see nobody in this room. Right. Tamisha in a room. Shanice in a room. Kiana in a room. All right. I think. Jackie in a room. Don't stick up, guys, because I'm going to be gone in less than 5. Because this call is going to be done in about 20 minutes or so. All right. All right. So I am out in a room. All right. Everybody else, stick it up. Stick it up. Stick it up. Stick it up. All right. Good. Good. So the session recording too. All right. So let's go. How many guys remember what we went through last session? Oh, Janelle. Janelle, what's it called? How many guys remember what we went through last session? Let's see who was here. You draw some gems. Seth, I think you missed our call too, boy. You missed it. Yeah, Janelle missing the really, really good. I ain't go over it today, man. If I can remember exactly what he did. If I can remember exactly what he did. Who was on the call last week? Let me see who was here last week. Burnett, I think he was here last week. Burnett. Were you? Were you here last week? All right, nobody asked for him. But I think I remember what he did. I just remember it being really good. Okay, for that, I'm gonna give you the ability. You can unmute your mic. What is it that we went through last week? I know it was real good, but what is it that we went through last week? Because I didn't remember to record chat. But you can remember anything? Like, jog my memory here real fast. You can unmute if you can. Make it faster.
I can't remember everything, man. I know we was on the chart.
Mm.
We was going through stuff on the chart. I can't remember. I can't pinpoint and I was listening. I ain't even write nothing. Usually I write, but I ain't got nothing in my notes, right? So I guess I was just listening.
Boy, that's no. All right. We go freestyle it to the structure. What about structure though? Like I don't remember what we went through. Like what about structure? I know. I remember I remember some, but I don't remember everything. You know, the people that meant that notes.
You talk about technical analysis, fundamental analysis, economic news. You talk about how to look at that something blue. Let's tell you about the
Okay. Yeah, he's trying for so forth. All right, cool.
Yeah.
I got anything else? Let me see.
And one point you said news is the excuse.
Yeah, for sure. All right, cool, no problem. I got an idea of what I spoke about. So, all right, we gonna jump through it. Fine, let's get back on to this. All right. Let's see what we could cover in the next couple. Let me see, because I actually remember Mark putting all kind of stuff on this chart. I don't know if it deleted. Oh, look, it's here. Look, it's here. Look. All right. Okay, and I give you guys examples, show you what's going on. All right, cool. All right, well, let's do it again. All right, let's do it again. All right, what was this? Something was there. Oh, okay, I remember that too. All right, cool. All right, I remember the basis of what we went through. It was a really good session, boy. You know, we try to repeat it. It don't be as good, but you know, we can just do it. Seth, you look tired, man. Everything good? Sounds like you want to sleep on me, boy. It's very hard, too hard slap. Wake up in here, man. Barely 8:30. Even 8:30 up. All right. So here's what we're gonna do. All right. So last week, you know, we went through because I know a number of you guys. Yeah, perfect. FS goes all you right now. I know a number of you guys. What's up, Ashley? A number of you were on came to the boot camp. All right, some of you missed the boot camp. Sorry, some of you missed the private mastermind. All right, some of you missed the private mastermind. Some of you were there. And one of the things that came out in the private mastermind was around the economic side of things. All right. So what we spoke about, I'm not gonna reference last week. We can just talk about it. I can never talk about it, right? So yeah, so we talk about the economic side of stuff, right? And basically what that refers to is the fundamental analysis, okay? Where you use like news events, etc., to basically like determine like what's going to happen in the markets, right? And also like the strength of different currencies and so forth, to also determine like on an overall scale like what's going to happen in the market, right? So one of the things that you know, Mr. Courtney Logan would have shared with us is what you call a currency strength meter. All right, very helpful. All right, but I want to show you guys how to use it. Okay, because you don't want to just take it for what it is. You know, you're gonna put yourself in problems. Okay, so a currency strength meter, right, which basically shows you the strength of a particular currency. Okay, so let me share this with you. Okay, so we're gonna go to, there's a website called FX Blue. Yeah, fxblue.com. Share that with you guys now. All right, fxblue.com, and you can go to the market data currency strength, right? Now, the thing about this, right, when you look at it, obviously it's going to always be changing. Okay, so you can't just, you know, like take it for what it is and that's it. Right? It's always going to be changing, all right? So you could look at it from a short-term basis, medium term, or long term. Short term, right? Like you can see here is the 5 minute, the 15 minute, and the 1 hour time frame. What this does, it tells you how strong is the currency on each time frame. Okay, so when it's blue like this, that means that, and the higher it is, so the higher plus it is, it means that the currency is strong on this time frame. Okay, so on the 5-minute time frame, gold is strong. On the 15-minute time frame, gold is strong. On the 1 hour time frame, gold is weak. Okay, so obviously, you know, when we are looking at peers, we're looking at gold to something. Okay, so we're looking at gold to the US dollar, for example. So on the 5-minute time frame, the US dollar is also strong. It's weaker than gold, right? But it's still strong. On the 15-minute, it's still strong, so bullish. On the 1 hour, it is bullish as well. So it is, you know, weaker than gold, but strong. Okay, 1 hour time frame, it is stronger than gold, all right, on that time frame. Okay, so simply put, for everybody on the call, we're going to use two currencies that are like one is strong and one is very weak. Okay, so let us use in this case all right, let's go medium term. Let's look at something. Okay, so let's look at the euro to the Japanese yen, for example. All right, the euro to the Japanese yen. The 30-minute is strong, 4 hours is strong, 1 day is strong. Japanese yen is weak, weak, weak. Everybody got that? All right. So if you got a currency, all right, if you got a currency that is, so the euro is strong and the Japanese yen is weak, what should happen to that currency? If we look at the euro to the Japanese yen, what should be happening with the currency? That's a question. The euro is strong, the Japanese yen is weak. What should be happening overall with the euro to the Japanese yen? Should it be buying? Should it be selling? Should be going up. All right, all right, it should be going up. All right, so if you look at euro to the Japanese yen, up. All right, so the euro to the Japanese yen was buying. Yeah, being buying. Okay, it's being going up. Okay, so that's clear. So if we had to look at maybe the Great Britain pound to the Japanese yen, right? You see, it just changed up a little bit just now, all right? But strong, and Japanese yen has been weak, all right? So I was in a buy for this pair last week, all right? Boom, same thing, okay? Now, this gives you, sorry, that's super clear for everybody, all right? Nothing complex, nothing complicated, all right? Pretty simple, all right? It's a currency strength meter. It gives you an idea of what is going on, all right? Now, the thing about it is that while the currency strength meter tells you or gives you an idea of the direction, all right? So this is what I want you guys to know, okay? So the currency strength meter, it gives you an idea of all right, it gives you an idea of the direction of the market, okay? But it does not tell you where or when to enter the market, all right? So overall, we want to know, okay, what's the bias? That's what the currency strength meter does, yeah? It gives you the bias, all right? The bias is that, okay, gold is going to, let's use this as an example, right? Let's look at gold. So short term, gold is strong, US dollar is strong. Right now, we should be basically consolidating-ish, right? On a short term time frame. Medium time frame, gold is weak on the 30-minute, 4 hours bullish, daily is bullish, right? So it's strong on the 4 hour on the daily, and the US dollar is weak on or weaker on the 4 hour and the daily. So overall bias of gold is that it shouldn't buy. Okay, that's the overall bias. All right, smaller time frames like short term, right? Short term gold bullish, gold in US dollar bullish as well, strong-ish. It should be like consolidating. Okay. Long term, gold very strong daily, right? Weekly very strong. US dollar weak, right? If you look at it, so daily very strong, weekly very strong. So the overall bias of gold is that we should go up. Would you guys agree? That'd be very strong on the daily, very strong on the weekly. So that's the overall direction of the market. Okay. You guys agree with that or no? The overall, that's overall. You see, everybody got that? Okay, good stuff. You guys agree? All right, so that's the overall bias, right? So for example, if you look at the daily, we can see gold has been bullish. Ain't no two ways about it. It has been going up, right? If you look at the 4-hour time frame, it has been like consolidating, at this point, right? So although it can give you an idea of what's going on, it's not going to give you the actual direction and so forth. So let's say we look at the 15-minute time frame on gold, which is more medium to short term, right? So gold, right? We gotta go to short term. Gold is showing strong. US dollar is also showing strong-ish, right? So it's like telling you consolidation at this point. That doesn't help you in the market, yeah, at that point. So the currency strength meter is going to be good for you, like I mentioned, on the overall direction of the market. Please remember that. Okay. That's the bias of the market. Okay. So that's more long term, what you should be looking for and so forth in the market. Okay. So I hope that makes sense. All right. No. I want you to always remember this. So this is all a part of using fundamental analysis with technical analysis, okay? Because you need both, all right? Let me say that. You need both. Always remember that, okay? The better you get at both, the better or simpler your trading is going to become, right? So you guys know I like to type out on the charts, all right? So you need both fundamental and technical analysis, right? Like I said, the better you get at both, simpler things become for you, okay? The easier trading is going to become, you don't get alarmed at the markets, when certain things happen, okay? So, all right, let's know that. All right, so with fundamental analysis now, guys, right? I mean, all that's fundamental analysis, but now when we're looking at news and so forth, anytime you enter the market, all right, you're looking to enter the market, first thing you want to do is check the news first. All right, check the news first. Where can you go to do that? All right, there's a number of sites that you can check. I like to check this one because it is fast. All right, you don't have much time usually when you go to the markets. All right, especially the same day. You can go to forexfactory.com. All right, so forexfactory.com. What you're looking for is, that all the yellow boxes are low impact news. You don't pay attention to those. You don't care anything about low impact news. It doesn't affect the market. No movement happens as a result. So like you could care less about yellow boxes, right? You don't want to see yellow boxes. Orange boxes have medium impact. Those don't really affect the market either, right? Nothing really happens as a result of an orange box. What you want to pay attention to, so like tomorrow, right, there are red boxes, okay? Red boxes is high impact news. So you want to look at the currency now. You see the British pound has high impact news at 2 a.m., right? At 8:30 a.m., there's also high impact news on the US dollar, okay? So we want to pay attention to those at 8:30 a.m. and also 10 a.m. there is a speech, right? So this, when you see speeches, that news could prolong for a little while, right? Like the volatility, the market can happen for a little while. At this point, for things like this, right? I believe this is like some type of like interest or something like that. I will check, right? But for news events like this has happened like in a moment. You will see an instant reaction at 8:30. you're going to see the market spike one direction. Boom. All right. It's going to go a direction. But here's the thing. You don't want to be alarmed at the news event, right? Because simply put, like Adele said it earlier, news is the excuse. All right. News is the excuse. What happens as a result, right, of a news event is literally going to be, if you are correct, or if your analysis is good, if your technical analysis is good, it is literally going to push the market in the direction of your technical analysis faster, right? Faster. It's not going to change the direction. It just makes it happen way faster. Okay, that's it. It just causes the event to happen a lot quicker. Okay, everybody following me? All right, everybody following? So I'm gonna look at where we got like some spikes in the market. So like here, for example, let me see. This is the 10th. That's the 10th. That's the 10th of May. Whoa. All right. Okay. So this is the 10th of May. Let's see if there was any news event on the 10th of May. All right. So we just go back real quick. All right, good. So the 10th of May, bam, we had news at 10 a.m. All right. And we had more Canadian news at 8:30 a.m. All right. So boom, market pushed. All right. Yeah, this was around 9:30, 10 o'clock. All right. So here, let me zoom in. All right, 10 o'clock, boom, was right here. So this was the news event right here, right? Market did it, boom, had a sudden push at 10, market pushed up, and then dropped. Okay, so that was a news event that occurred at 10. Okay, so let's come down smaller time frames so we can get more specific. I just want to show you guys what I'm saying. So at 10, this was the 10 o'clock candle right here. It's exactly at 10. Okay, market went from here, boom, and pushed up to this point, and then dropped. Okay, the direction of the market didn't change. It just caused price to get from here to here faster. That's it. And then from here down here a lot faster, right? Price it just speeds it up, right? It makes it move a lot quicker. The direction doesn't change. It just enhances the rate at which the market reaches a particular point. Okay, that's it. So when we understand that, when we come to the place that we understand, okay, well, cool. News is the excuse. News causes events to happen a lot quicker. Then we know how to set up, right? We know how to set up for the markets. So I believe I used the example of, I was trying to use the US 30 example, right? But the markets didn't go all the way back, to those dates, right? It didn't go that far, right? But nonetheless, I'm gonna show you guys still, right? So let's say we go to US 30, for example, right? The Dow Jones, you guys see, if you watch like CNN and all that kind of stuff, you always see the Dow Jones coming across the bottom of your screen, right? Everybody see that? Dow Jones or the NASDAQ and so forth, all right? Everybody see Dow Jones and NASDAQ and so on. It's only me. I see that. Always seeing NASDAQ. Never knew what it was. Or Dow Jones never knew what it was. All right. Yeah, we could trade those. Yeah. All right. So let's use this as an example. Yeah, we weren't able to go back into 2020. This 2020? That's December. Oh, I don't want to get to, yeah. I wanted to get to January 2020 when COVID had hit, right? But the market's been going back that far, right? But basically, how it had looked was it had looked like actually it had looked like this. right? It had looked like this, right? Similar. So basically what had happened, right? What had happened was that the market was just going up like this, right? Just going up, going up, going up. All right. And then we started to get like a lot of choppy movements. You see like this, and it started to go up, slower. So you see how this was going up a lot faster. Then we started to go up a lot slower. And it was happening like that for a long time. So imagine you seeing this happen, right? And then something looking like this, a slow movement up, and dragging up, right? For a long, long time. So all the traders, are like, all right, something big is about to happen. We were always saying that a recession was about to occur, right? Because the market was setting up, US 30 and so forth. This is like 30 biggest companies, right? It was setting up that it was about to decrease in value. This pattern, you guys, as you start to, go through patterns and so forth, you will understand that this type of pattern, we see something looking like this, the market is building up liquidity, all right? Mad amount of liquidity build up, a bunch of imbalance down here, the market has to rebalance itself. So anytime you see something looking like this, you know something is coming. When? You have no idea, but you know something is coming, right? And then watch what happened, like this, for example, then COVID hit, and we got this spike. Boom, market did like that, all right? And then, like, started level out a little bit, right? And then everybody had to get locked down. Nobody can leave the house, etc., etc. And then price did like this, bang. Right? So the news events caused the movement, something that took, like months to happen like this, happened in like a day or a week, right? Gas and oil went to $0. I don't know if you guys, anybody was trading around then, but oil went to literally $0. It had no price, right? It had zero price. Here, look, actually, how could I still, like, yeah, it's crazy. In May, look, oil was at zero minus. Furthermore, I got it here, right? Oil went to zero. Oil came all the way down to zero. So you know what we were doing at that point? We were buying. Like we were on the charts, pressing buy, right? People say, yeah, we definitely probably made money on oil, right? We were pressing buy until to the point where that the broker stopped us from putting in entries. Because if oil at zero is only one direction that oil could go afterwards, it could only go back up like it did, right? But the broker stopped us from entering, so we made some money, but we didn't make as much money we could get stinky rich at that point, right? From gold going all the way back up to 100, you know what I mean? But it stopped us from entering the market, because, I guess everybody just get rich at that point, right? But again, that's to say, news is the excuse. So when this drop happened, right? When this drop happened, like look here, right? I was about to dump the kitchen sink off. I'm telling you, right? So right here, this happened here, right? When price come here in 2020, right? January, we got price to like this, boom, I pushed down. Yeah, all this, like we know this patterns playing out, we can see what's about to happen in the market. Technical analysis is not going to fail you, right? But the news is just going to make it happen faster. So like we got price pushed down, and it's supposed to be end up pull back, market just sank all the way down, boom, straight down to zero. All right, straight down to zero. So again, it's to say, it's you looking at the markets now, right? Yes, you have your fundamental analysis in place. Yes, you have your what's going on with the news and so on and so forth. All these different things happening with Israel and all that kind of stuff, right? Those things are great, but again, you still gotta couple it with technicals. So you got bias of the market. Okay, this is what's happening. This could affect the dollar, or this could affect, gold in this particular way. But no, we want to see, okay, well, where exactly are we looking to enter the market? Because there's a bias on gold for a buy. That don't mean that we buy, right? So like here, for example, like I sent out a bunch of sell opportunities, right, for gold to drop. Because although the bias is for a buy, we're not buying yet, right? We're not buying yet, okay? And that's how a lot of retail traders, they get messed up in the market because they're just looking at, you know, like currency strength meters and say, okay, well, yeah, the bias is a buy, so let me buy. You will forever be in that buy in a drawdown, right? In a mad loss, waiting for price to buy. Nah, right? You probably go broke waiting for price to buy, right? So you're always, right, as you know, correction, you're always buying. We know we buy at discount prices, right? We always buy at the discount prices, right? But what I wanted to also share with you, I know we went through some more stuff in that. Right. So what we went through as well was, you know, like the life cycle of the market, right? Let me show you this because again, it's going to help you significantly, you know, when you start to look at the markets, all right, more in depth. Basically, price moves the same way over and over and over, right? Before, like it's the same thing. Okay. I want to help you to get clarity. A lot of sessions I do is on market structure because I want you to understand what's happening. All right. When you understand like what's going on in the market, it makes trading very simple. All right. So I'm entering the market. It's a lot obviously based on structure, based on what's going on, right? Because I got an understanding of the markets, right? So here's basically what happens. We know that price, you know, when we form an uptrend, it's a series of higher highs, higher lows, right? This is an uptrend, right? When the market starts to do this, a range or what we call consolidate, this is where we've got a lot of liquidity build up, meaning, all right, meaning that there's a lot of buyers, there's a lot of sellers, right? There's no clear trend in the market. When we see this start to happen, right, the next likely outcome is for this to occur. All right, price shifts. All right, and this is how you're gonna see the market basically move, you know, like over and over again. All right, so we have, you know, the market trends, and then it goes into a range. Okay, so it's like here, market is trending, and bam, the market goes into a range. It goes sideways. Then it trends, all right, and then bam, it goes into a range. All right, because what is it doing? It's collecting money. It's collecting dollars at this point. All right, it is the market is now building up liquidity to make big moves. If it doesn't build up the liquidity, it's not going to make those big moves like that. So that's why the market goes into consolidation, right? It starts to range before it moves. So when you see, for example, like here, all right, open up a lot of stuff on the screen. I hope you guys can still see and it makes sense, all right? This came as a result of last week. All right, I'm gonna take it off and put it back and show you guys this again. Right? But basically, what happens is you will see that price, right? So market is coming down like this, for example. And then you see like we start to come down slow, right? We get here and we start to like go sideways, right? We start to go sideways, no clear direction down before we shift and go up. All right, that's literally how the market is going to always move. All right, you know, two ways about it. That's what's going to happen all the time. All right, so let me take this off. Actually, no, we're gonna just do it somewhere else on the chart so that see how we got my screen looking. I remember a time. I think it was Courtney. I was showing Courtney something on my screen, and when it popped up with all this. He was like, "Bro, what is going on?" I was teaching him. I was teaching. They got people thinking I'd be tripping. All right, people be like, "What is happening?" Right? Like, what is all this, bro? Oh, that's a trick. Like, what? But yeah, anyway, so let me show you guys what's going on. All right. All right. So, we're looking at technicals. All right. We're looking at technicals. And I want you to do this, with your chart, just get familiar, get accustomed, and you're gonna realize this thing is pretty simple. Okay. It's not hard at all. Okay. Now, here's the thing. All right. As we know, market is made up of series of higher highs and higher lows. All right. Every time the market breaks a high, that's when you would be considered to have is quarter to nine. Well, right. I gotta go shorty. All right. Every time, give me 1 second, please. Y'all let me get cussed. I'll go for my wife. What's that? All right. Let me get cussed. All right. So, so the market is made up of a series of higher highs, higher lows. All right. I'm giving you guys this as a bonus, because I don't remember what else we went through, but this I'm gonna give you guys this today. All right. So it made sense. So basically, what happens in the market is that every time we break a high, that's when we are considered to have a strong low. Right. This is how you will know like whether you are going to buy or sell, whether price is going to break through a particular low, all that good stuff, right? So let's say, for example, like here, right? This is your low in the market, all right? Market low like this. This is your low in the market, all right? This would have been like your last previous high, okay? So like this would have been your low. This would have been your lower high, right? And then this became your actually didn't already create a lower low, right? This is just your low at this point. So if price, number one, is the first thing to think, the first way to think, if price did not create a lower low, all right, it created an equal low, that means that this high is weak. That's the first thing. You gotta say, okay, well, good. If price didn't go ahead and create a lower low, we got a weak high. Okay, so like here, for example, this is a strong high. Yeah, so this is a low. This is a strong high because price went ahead, boom, and broke through this low. So this is a strong high. Everybody follow? Put in chat real fast. Don't stick up. I'll go my way. All right. Put in chat fast so that I know you're following. Right. This is a strong high. Okay. Good stuff. All right. This is a low. Right. This is not a strong low because we did not break here, which was a strong high. If price broke this high, all right, if price broke this high, this would be considered to be a strong low. It didn't. So market is going to continue down. This is a weak low. So we're looking to come for those lows. Am I making sense? All right. Let this make sense. Like this is going to unlock so much things in your mind, right? When you look at the chart, you're going to be like, bruh, why didn't I see this before? All right. Helping you all at this point. Okay, good. So this is a strong high because price went ahead, boom, broke the low. This is not a strong low because price did not break this high. Price came out and created a lower high. That's how we know, and that's why we said to have a downtrend, right? You guys know I like to, help you all understand the why behind things. Okay, it's a downtrend because here it's a weak low. Price has to come through and break this low again. Bam, we did that. All right, this is now the high. Right, price came through, broke that high, weak high. Okay, price came up again, so we came up. Boom, this is now a strong point for us. Right, well, this is now a high for us. Right, and price did not break this low. Okay, price did not break the lows. You know what I mean? Weak high. Right. I laugh because, bro, as I say this, I was like, this is the key I'm giving y'all. This is a weak high. All right, it didn't break the lows. It's a weak high. All right. So what does that mean? We're gonna break through this high. All right, we're going higher. All right, higher highs have to be created. All right. So watch this now. Boom, market come, created a high. Bam. All right, we broke through this high, and guess what? We broke this high as well. Right. So now we're in an uptrend. Oh my goodness, gracious me. This I know all out so much y'all at this point, right? Now we're in an uptrend because this was this strong high. What's in my own head at this point, right? Watch it, like so simple. This was this strong high, right? This was this strong high in the market. Price brought this strong high. So now we're in an uptrend. It's like, yo, all right, cool. Right? And guess what? Watch this, look. This is also a strong low. Why? Because this is the push that broke the strong high. That's it, right? This is the law that broke the strong high. So this is the push that broke the strong high. This is now your strong low. So you are not expecting price to break through this low. Can't. All right, it's not supposed to happen. Why? Because it broke this high. Right? This is your strong low at this point. Boom, price pushed up. So guess what? No, you see the market come, right? And trade back down, fill imbalance, etc., etc. Bam. This is here, right? Boom. This becomes your strong, your next low. How do we know if it's going to be a strong low? If it breaks the high, right? Actually, consider this. Whoops. Right? Actually, we're going to consider this. This is going to be your strong high at this point, right? Because price pull down, push back up some more. This is going to be your high. We're going to consider this to be the high at the point, okay? This is your strong high. Is this a strong low? We don't know, right? We're going to wait and see if price breaks this high. It is a strong high, right? We know that if price breaks through this, then we're going to switch direction. This is going to be a downtrend. But price can't break this, right? This is your strong low. This is what created the high. Price pull back. Guess what? Again, right? Look, let me show you like this. Price broke through the high. Boom, straight through. All right, this becomes your high. Mark it down. Right? This becomes your high. Once price don't break this low, this is your strong low. Well, already it's your strong low because it broke the high. Right? It broke this high. So it's your strong low already. So we know we are looking for more buys. Bam. This becomes a strong low. Right? This becomes your next low. Right? Boom. We know that. All right. At this point, right? Price breaks this again. Again, this is your strong low. Okay. Here, this was not your break, was it? We had equal highs at this point, right? So we know liquidity build up, right? This is a push that broke the high, strong low. Price ain't gonna break through that. Not like that, right? Price ain't gonna break through that. So this becomes only strong low, right? So price pushes up, boom, gone again, right? Created a high, liquidity. See those equal highs, right? We coming for that. Price did not break this low, boom, strong low, pushes, breaks the high. Y'all get it? Y'all get it? Y'all get it? I hope you get it. Remind me, we're going to continue this next session, okay? Remind me, we're going to continue this next session. Let me know that you guys, Sassy, feel like a new again. Let me know if you guys got it. All right, my phone at 3%. Good. Glad to see you guys got it. It's your game changer. Perfect. I hope that made sense. Like, so simple. All right, so simple. Like like these sessions, because it's betraying myself too. The more you be saying it, all right, the more things is just like even more things is just unlocking my brain. Like, like why you're doing certain things. It's like, bruh, like this is why, and that's why I like to do these sessions. I like to train, like to teach, etc. Because it gets me, to a place of just getting more solid, as it relates to my trading, man. So I trust that everybody got value on the section. All right, we're gonna put the flyers and so forth in the chat. Wake up, Ashley. All right, we're gonna put some flyers in the chat and so forth. We're gonna do this recording to go over for sure. You guys, no problem. I'm gonna get that, probably put it on YouTube or something and send it to you guys. But yeah, man, that is it for this call. Again, remind me that session that we're gonna go through. We're gonna start back from where we left off, literally from that point. All right. So with that being said, we've been here for a little while, 2 hours. Sheesh. All right. Yeah, my phone today, guys. So yeah, so with that being said, all right, have a good one, be blessed, and I'm gonna see you guys not next week. I think I'm gonna be traveling next week. Yeah, I think I'm gonna be traveling. If I'm in, we're gonna do the call. If I'm not, then we might do another day. But yeah, we connect with you guys. But yeah, also here's the thing, right? Convention coming up. If you haven't got a live stream ticket, go and get a live stream ticket, right? So you can watch the live stream. We are gonna be in Atlanta. Some of us gonna be live in Atlanta watching the actual live convention happen. Get a live stream ticket, events.envisioну.com. I think the live stream ticket is like $77 or something like that. Go and grab it, right? Go and grab it, so that you can, like see what's going on to the same time. All right. So be blessed. Have a good one, guys. I'm gonna see y'all very, very soon. Go over the information, like practice, this will help. All right. Stuff I know I just blow your mind. Let's go. That's where you're gonna be on these sessions on a Monday. Don't know what's gonna come. All right. Yeah, no after credit skirt. Sorry, bro. My phone died and everything too. I'm gonna go for that. See y'all. Bless up.